I worked for banks for many years, but then after the financial crisis, someone introduced me to Twitter, and I went on Twitter and found lots of people talking about a financial crisis, and a lot of what they were saying was about banks, and I thought, but that's not right. Banks don't work like that. It really doesn't work like that. Interestingly, the blame has shifted over time. When I first started writing, the blame was all being attached to investment banking. But in the UK, it absolutely wasn't. It was retail banks that failed. It moved on a bit from then onto big banks. And so then we hate big banks. We had Move Your Money, which was trying to get people to move their money from big banks into small banks and credit unions. And I was going, yeah, but the small banks didn't do too well either. Banks should always watch their backs. I mean, the big banks have huge challenges at the moment. I mean, a lot of small banks do as well, but the established banks, the existing banks, should we say, have huge challenges at the moment because they're also affected by things like monetary policy, which brings rates down into zero or even negative territory, makes it very hard for them to make money. And at the same time as they're getting pressure from politicians to lend more. So they are watching their backs all over the place. Oh yes, and under pressure to give much better service to customers as well. I don't think they're going to make this, and eventually they'll come around to the idea that the new business model in the future is going to be, for example, much lower returns on equity, much higher capital levels, much more focused on customer service, much more like regulated utilities. No, actually. I know that there's been a report recently, the OECD is warning about a financial crisis possibly in China. A few people have been warning about that. The debt levels are very high there, or in emerging markets generally very high levels. But I actually regard that as just a continuation of the 2008 financial crisis, because I don't think it ever ended. You know, I think central banks actually, I would have to say they have done an extraordinarily good job over the last 8 years because they've been doing all the work. I mean, governments have been basically in a blue funk, desperately trying to batten down the hatches and not spend anything, while trying to get central banks to shore up the economies and get them moving again. I think far too much has been expected of central banks, and they've not done a bad job. But you know, there have been unfortunate consequences from their policies. We know, for example, that QE raised inequality. It had spillover effects in emerging markets, which are coming back to bite us now. We know that negative rates have quite bad effects on the longer term, over the longer term for savers, for pension funds, for banks, and that has consequences as well. So I think now we're looking at an adjusted policy mix, and I think they're beginning to rethink some of their assumptions about how money actually works.